Discovering that your digital banking platform has suddenly restricted access to your funds can induce instant panic. When dealing specifically with a digital-first institution like PiBank, an unexpected account freeze stops your financial mobility entirely, preventing everyday transfers, bill payments, and withdrawals. Understanding the exact protocol required to lift the restriction efficiently minimizes downtime and restores control over your money. The very first action involves identifying the root cause behind the security block. Financial institutions implement freezes for several distinct reasons, ranging from routine compliance updates to strict security protocols. Automated fraud detection algorithms frequently flag unusual transaction volumes, sudden large deposits, or unfamiliar login locations. Alternatively, outdated Know Your Customer documentation or unverified personal details can prompt compliance departments to lock an account until identity re-verification is successfully completed. Direct communication with customer support is the most effective next step to clarify the exact nature of the hold. PiBank can be reached through their dedicated customer service telephone lines or by requesting a callback directly through their official help channels. Remaining calm and professional while speaking with a representative ensures a productive conversation. Direct inquiry should focus on discovering whether the restriction stems from a temporary security alert, a compliance review, or a legal inquiry, as each scenario demands a completely different resolution path. Gathering requested documentation promptly accelerates the review process significantly. If the institution flags a transaction for potential fraud, prepare to provide transaction receipts, invoices, or proof of the origin of funds. For identity or address verification triggers, have valid government-issued identification, recent utility bills, or official tax documents ready for immediate submission. Failing to provide accurate paperwork promptly remains the leading cause of prolonged account restrictions and extended processing delays. Formal escalation procedures become necessary if standard support channels fail to provide a clear resolution or timeline. Submitting a written complaint via formal channels creates a documented paper trail required for regulatory oversight. Financial institutions are bound by strict regulatory guidelines and must investigate formal claims within specific windows. If internal complaint resolution stalls, customers retain the right to escalate grievances to governing bodies, such as the Office of the Comptroller of the Currency or Consumer Protection Agencies. Preventative habits reduce the likelihood of future banking disruptions. Maintaining updated contact information, responding immediately to bank inquiries regarding account security, and avoiding erratic transaction patterns help keep profile compliance clear. Establishing alternative liquid savings channels also ensures that a temporary freeze on one platform never leaves daily financial obligations entirely unsupported.